Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Bangko Sentral ng Pilipinas vows to prevent a significant depreciation of the peso, a move that could help ease pressure on consumers and businesses alike. Finance Chief Ralph Recto asserts that it's still too early to predict how a possible U.S. recession might impact the country's growth outlook, keeping investors on their toes, but also encouraging caution. A Timor-Leste court makes waves by overturning its earlier decision to extradite former Congressman Arnie Teves to the Philippines, raising questions about legal stability and the fight for justice. And U.S. President Donald Trump makes a bold move, ordering the dismantling of the Education Department, a decision that could shake up global education systems and make waves beyond the United States. All these stories and more coming up. First, let's take a look at how financial markets performed overnight. U.S. stocks closed slightly lower on Thursday after veering between gains and losses as investors gauged the latest round of economic data and the Federal Reserve's policy statement against tariff concerns.
So today the market is really struggling to kind of find a lane. I think you've got what is still a slightly negative growth backdrop and the tariff uncertainty that has obviously been a huge contributor to the 10% correction we entered, but buoyed by some positive comments on the consumer, some economic data surprising to the upside, and obviously a primarily dovish Fed yesterday.
The Dow Jones Industrial Average was flat with a downward bias. The S&P 500 lower by 0.2%, and the Nasdaq lower by 0.3%. Over in Europe, markets are down. The UK's FTSE is flat, Germany's DAX down by 1.24%, and France's CAC 40 lower by about 1%. Now here at home, the Philippine Central Bank will work on preventing major fluctuations of the peso, particularly if it's weakening. That's according to BSP Governor Eli Remolona Jr., citing emerging markets from Indonesia to Turkey, which turned volatile this week. In an interview with Bloomberg TV, Remolona said that a big swing towards depreciation tends to be inflationary, and they have to resist it. Intervention by the BSP has helped a gauge of 1-month peso volatility decline from a 4-year high touched in November. But concerns over local politics hammered the Turkish lira and Indonesian stocks this week, putting emerging market central banks on guard as risk sentiment turned fragile. Volatility could rise again if the dollar strengthens. This is important for Philippine business as a stable peso helps control inflation and maintain economic stability. Controlling volatility will also keep investor confidence strong, protecting the market from unexpected shocks. Finance Secretary Ralph Recto says it's too early to speculate on the possible impact of a U.S. recession on the Philippine economy. Recto's remarks come after Ruben Carlo Asuncion, chief economist at Union Bank of the Philippines, warned that a U.S. recession could impact Philippine growth projections. Recto, however, remains confident that the Philippine economy can still reach its 2025 growth target of between 6 to 6.5%, which is at the lower end of the government's 6 to 8% target range. The Philippine economy expanded by 5.6% in 2024, falling short of the government's 6 to 6.5% target. In a nutshell, a U.S. recession could affect the global economy, including the Philippines. However, the country's growth target remains within reach, fueled by strong local economic performance and government support. A stable growth outlook continues to be crucial for businesses, boosting confidence in the Philippine market. Aboitiz Power Corporation allocates nearly 80 billion pesos in capital expenditures for 2025. This is an increase from last year's 73 billion peso allocation as the company accelerates investments in energy infrastructure. Aboitiz Power says over 65% of these funds will be directed towards expanding its renewable energy portfolio, with plans to increase clean energy capacity to 4,600 megawatts. Aboitiz Power serves as the group's vehicle for power generation, distribution, and retail electricity. This investment signals a push for cleaner energy sources and reduced carbon emissions while meeting growing demand and securing the country's energy supply for the future. Ayala Corporation borrows billions after signing its first yen-denominated loan worth 11.5 billion pesos. The move is part of the company's strategy to diversify its capital sources and support expansion plans. The agreement designates Mizuho Bank Limited and Sumitomo Mitsui Banking Corporation as mandated lead arrangers and bookrunners. Ayala Corporation Treasurer Estelito Biacora explains that the Samurai loan will help the Ayala Group expand businesses that enable people to thrive. The deal follows the company securing an A- credit rating from the Japan Credit Rating Agency Limited. Ayala's successful Samurai loan signals a stronger global market presence and increased confidence in the Philippines' creditworthiness, potentially attracting more foreign investments and supporting long-term economic growth. Rice imports dropped to almost 641,000 metric tons in the first quarter of the year. Data from the Department of Agriculture shows this is a decrease from over 1 million metric tons that arrived in the same period last year. The decline comes as local harvests of unhusked rice or palay take place. DA spokesperson Assistant Secretary Arnel de Mesa explains that this reduction follows last year's high import volumes and expectations of a stronger local harvest this year. This decrease in imports reflects improved local rice production, which could lower dependency on imports and help stabilize prices. This trend is a positive development for the Philippines' agriculture sector, indicating stronger local harvests and contributing to food security efforts. A good harvest season also fosters sustainability and economic growth in rural communities. President Bongbong Marcos Jr. appoints former Union Digital Bank President and Chief Executive Officer Henry Aguda as the new Secretary of the Department of Information and Communications Technology. The Presidential Communications Office says Aguda's experience covers the banking, technology, and telecommunications sectors with specialties in digital transformation, digital banking, and financial crimes. Aguda succeeds Ivan John Uy, who resigned earlier this month. Before his new role, Aguda served as the digital infrastructure lead at the Private Sector Advisory Council, a group tasked with assisting the Marcos administration in creating innovative partnerships between the private and public sectors. National Security Advisor Eduardo Año denies having prior knowledge of the arrest of former President Rodrigo Duterte. During a Senate Committee on Foreign Affairs hearing, Año says he only learned about the Interpol notice on the same day it was served to the former president. Interior Secretary John Vic Remulla also clarified before the committee his statement aired on BNC's On Point, which mentioned a core group that orchestrated the arrest.
They asked me if I planned it. I said it was not me. There were other people in the room, but we did not discuss any plans of any arrest. We were discussing rumors of an impending arrival.
As committee chair, Senator Amy Marcos sought more details on the arrest. Justice Secretary Jesus Crispin Remulla invoked the executive privilege of cabinet members. For everything that transpired, this is what Vice President Sara Duterte had to say.
Magalit man tayo, walang papupuntahan yung galit natin. Dahil hindi naman yan sila papanagutin ng pamahalaan ni. Nakikita nyo yung mga sagot nila, wala na sa ayos.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
Magandang gabi, ako po si Pinky Webb.
At ako naman si Corina Sanchez Rojas.
Kombinasyong Corina Sanchez Rojas at Pinky Webb. Dalawang mamamahayag na subok sa tapang at talino.
Simulcast tayo sa DWAR, Abante Radyo at 94.7 Mellow BFM.
Mapapanood din tayo sa Abante Teletabloid sa Sky Cable. Sa bawat issue may anggulo at ang balita may agenda.
Who defines strength? Who shapes the future? Who stands tall even in the face of challenges. Women of substance are everywhere. They build, they heal, they lead, they love. We celebrate you because you matter. Happy National Women's Month.
Let's take a look at how Asian bourses are faring this Friday morning. Now, despite the sell-off in the West, the Nikkei 225 is in the green, higher by 0.6%. Hong Kong's Hang Seng Index is in the red, lower by 0.3%. Hong Kong's Shanghai Index flat with a downward bias, lower by just a little under 0.1%. And Singapore's Straits Times Index lower as well by about less than 0.1% right now. Taking a look at our market right now, recall the PSC Index extended its winning streak Thursday, climbing 0.2% to 63.23 as investors took cues from Wall Street. The Federal Reserve kept its interest rate steady, giving the Bangko Sentral more room to cut rates, possibly as early as their meeting on April 10th. Now, this prospect helped lift market sentiment. This development also signals a positive outlook as lower interest rates could stimulate economic activity, boosting consumer spending and investment. It also provides a more favorable environment for companies looking to finance growth or expansion. Right now, let's take a look at the PSC Index as of 10:15 this morning. The main gauge is down by 0.4% to 62.96. All shares index in the red as well, lower by 0.8% to 37.17. As for the sub-indices, I'm seeing a mixed picture. The financial, services, mining, and oil counters are bucking the market's current downtrend, whereas the industrial, holding firms, and property counters are contributing to those declines in early trade. Now, the foreign exchange market, the peso opened flat at 57.20 against the greenback from its previous close of 57.22. Now, with global trade tensions escalating and tariffs reshaping the alcohol industry, how will this impact the Philippine market? Today, we're speaking with Andrea Sambar, the CEO of Boozy.ph, the country's leading online liquor retailer, to break down what this means for consumers, businesses, and the future of the alcohol industry in the country. Hi, Andrea, and welcome.
Hi, morning, Maiki. Thank you for inviting me.
Okay, so Andrea, U.S. President Donald Trump proposed 200% tariff on European alcohol. That's sending shockwaves all around the globe. The proposed tariffs could push a $15 bottle of Italian Prosecco to $45. What was your initial reaction to this announcement?
You know what? When we heard that President Trump had plans on increasing tariffs, we were absolutely shocked. To the point of laughable, actually, because 200% is quite a large number amount. I mean, as you said, $15 suddenly turns to $45, right?
Yeah, 200%. It's crazy. Taking a look at our alcohol industry, let's break it down by category. There are three. There's the wines, the liquors, and the spirits. Yeah. Wine, we import 80% of that. Mm-hmm. The balance would be like the Novelinos,
yes,
right?
The local wines.
When it comes to whiskey, we import 100% of that. Yeah. So that's where we could possibly really get hit. And the spirits, that's a category you can tell us about.
Right. So spirits is actually in the whiskey category in what we look into. So the imported spirits that we do receive, predominantly we get from the EU, right? So these are the scotches, the whiskey brands that we tend to enjoy on a daily basis. In terms of impact here in the Philippines, well, if the US were to impose these tariffs on the EU, we'll see an oversupply for sure of these whiskeys. These brands will need to find other and alternatives
to sell.
Exactly, yeah. Right. Asia is a prime industry or a prime market for that, right? We'll see an influx of oversupply of these bottles coming into Asia, specifically the Philippines, because we are an emerging market for them.
Mm-hmm. Oversupply, that means, that means prices are going to go down. So given that glut, you think that prices will come down here in the Philippine alcohol industry, given the oversupply, and they're going to have to, when it comes to fine wine, that can stay.
Yes.
They don't have to sell that right away. But when it comes to the lower tier wine, that's got to go already.
Yeah.
When it comes to whiskey, that stuff will benefit from maturation. So, the oversupply, where again do you see that taking prices locally?
So as you did mention, great point. So these bottles, especially with wine, do have shelf life, right? So with lower tiered wines, we are seeing that prices should go down even further, because of the oversupply that will be coming from the EU. Though we do need to balance it out with the foreign exchange, right? Because if the currency of the Philippine peso does weaken, we do expect that the cost of these bottles to be more expensive. But at the same time, we do see it balancing out because there will be such an oversupply of these, and that we do expect them to, again, land here in the Philippines or within Asia in general.
Okay.
Now, if we look on the other type, which is the whiskeys or the liquor, shall we say, right? So these can actually benefit from extended maturity. They age so much better, right? Sitting in the barrel. So the brand owners could actually utilize this time to,
They can sell now or they can hold off that inventory. It really depends on when they want the money.
So either they look to for their cash flow now and try to sell off the bottles, or they can hold on to these casks, these barrels, and get better and more exquisite bottles in the long run, right? 25 years, 30 years down the road.
Going back to wine, the Philippines imports 80% of what we consume. Of that 80%, the lion's share, or 34%, this is based on the latest 2023 data from the IWSR, which is the International Wine and Spirits Board, London-based group. Most of our wine, 34%, is actually from the United States. And then followed by Australia with 13, and then after Spain. What does this tell you about how things could go?
Well, we've been predominantly an American wine drinkers, right?
We don't like the old world ones. That's expensive for the Philippine country.
So the wines that we get from California, those are what we like to drink because they tend to be sweeter. Right, it's much more palatable.
Taste profile,
really,
they get more sun.
Exactly, right, riper fruits. So in terms of American wines, since they don't actually import or export quite a bit to the EU, we still got to be status quo here in the Philippines. Right?
Okay, all right. How significant do you think the price changes could be? So the oversupply in, following the tariffs. That's going to lead to more stuff. They're going to have to sell in Asia. With more inventory, how much lower could prices get?
Definitely going to expect lower prices, especially for wines.
Would it be significantly lower?
Not significantly lower, I don't expect.
So that's how much percent?
If I would say around 5-10%, right? To give you an example, China actually did impose similar tariffs to Australia back in 2020. So they imposed similarly 200% tariffs on Australian wines. The Philippines at that point, 2020, our Australian wines was at its low because of the pandemic, but it rebounded, unlike the other wines, right? Because of the oversupply. So we did see them inflow into the Philippines. So it's something that we do expect with both American and EU wines.
How sensitive is the Philippine alcohol market to price fluctuations? How price sensitive are we?
We are very price sensitive. There definitely is brand loyalty. So we know how much our favorite bottles cost, and we know if these prices are going to go up or go down. Right? And even a simple 100 peso, 200 peso increase for these wines, we do feel it in our pockets.
But we expect it because of excise taxes and sin taxes, that increases annually.
Yes.
So the expectation is that these prices never go down, right? Last year we saw a 6% rise on account of these taxes. What's your outlook for this year?
Well, ultimately, I do believe it's going to be part of the brand owners, right? Whether they do choose to absorb those costs or whether they choose to pass it on to the consumers. I think ultimately we'll have to take a look at how each of the brand players, their stock level and their inventory around the world, and how that impacts here in the Philippines.
Okay, and what is your key outlook, your outlook for the alcohol industry this 2025 against the changing environment, a rapidly changing environment?
You know what, 2024 was a challenging year for us, right? We still saw some effects from 2023 in the pandemic, so 2024 was definitely a challenging year. We do continue to see 2025 to be another challenging year, given that we've lost a lot of key markets such as pogo players who drank quite a bit and had a lot of alcohol consumption in previous years, right? So while we do expect prices to go down, we do still see that with the younger generation as well, and the trend nowadays that people are consuming less liquor, it to continue to decrease.
Yeah, there's also that trend of people being more health conscious in general, which we see in people favoring supposedly healthier alcohol brands and categories like tequila. All right, well, anyway, that's all the time we have for this. Hopefully, they're able to settle the tariff issues on a diplomatic level, so everything is steady for the industries globally. All right, in other news, a Timor-Leste court overturns its earlier decision blocking the extradition of former Congressman Arnie Teves to the Philippines. The Justice Department is now seeking clarification on the new ruling, which raises both legal questions and the quest for justice. The department assures the public that it will explore all legal options to bring Teves back to the country to face murder charges for the death of Negros Oriental Governor Roel Degamo and several others in 2023. Teves was arrested in Timor-Leste in 2024. The case underlines the need for legal stability and international cooperation, which directly affect business confidence in the Philippines. On another front, U.S. President Donald Trump signs an executive order aiming to dismantle the Department of Education. If Congress passes the legislation, school policy will be handed over to the states, a campaign promise that had energized conservatives while raising concerns among education advocates. The Education Department oversees around 100,000 public schools and 34,000 private schools in the United States, providing federal grants and special programs. It also manages $1.6 trillion in student loans for Americans struggling to pay for university tuition. While this move is focused on the U.S., its impact could reverberate globally, including here in the Philippines. The restructuring of the U.S.'s education system could affect international student loan markets and the mobility of Philippine students looking to study in the United States. Business sectors involved in education and student financing might also need to adapt to potential changes in U.S. policy and its impact on global education trends. And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel. See you Monday and have a good weekend.